everyone, it's Jennifer Velasco with eXp Realty on Heart in Your Home Real Estate Network. And I have a special guest with me here today, Nicolas DiGennaro, loan officer with Village Bank. And he is going to help us answer and understand some of the many questions that people have when it comes to buying a home. Thank you, Nicolas, for being with us here today and taking your time to answer some of these questions.
Thank you, Jennifer, for inviting me to do this video with you. I'm here to help you guys. Any question you have, please let me know.
So many people have made the decision that they want to go ahead and buy a home, but they don't know where to start. So we are here today to help you find those answers. So Nicolas, what would be those things, documents, or information that a potential buyer needs in order to apply for a loan?
Yeah, so basically, Jennifer, the first thing that I do is basically I do an interview with the client or either online application where I can actually, I can see if I can pre-qualify the client in order to see what documents they're going to need. In the mortgage world, basically, we need four things. We need income, asset, debts, and credits. Now, it will change for every single person.
Okay.
Depends on the document. Depends on the document that they can bring to me.
Okay.
I prefer to pre-approve the person. In this case, it's better for them, basically, so they can actually have more power for them to fight for the sales price of the house, and it's like they have cash in hands.
Now, when we say you need to find out what type of mortgage you qualify for, what does that mean? What are the differences between the different types of loans?
So basically, the interview is one of the processes that help me find out, basically, to discard different programs from that person.
Okay.
Because basically, if you are a military a veteran, I can use a VA loan. If you're a first-time home buyer, I can use a VHDA loan. Of course, we can use FHA, we can use conventional, we can do USDA. So it all depends on what the person tells me, what information do I gather from him or her in order for me to discard other programs.
And a lot of times we hear different things like with a loan you can receive grants. What are grants? If you can explain that a little bit more for us.
Yeah, so a grant is basically a gift from the government. A government entity will give that to you, or a non-profit organization.
Okay.
For them to help you with your either down payment or your closing costs. Now we do have two different grant programs. We have the Federal Home Bank Loan, which has three different grants program within them. The first one is for the first-time home buyer.
Okay.
Which pretty much everybody qualify for it. It's $5,000. Pretty much, of course, it has an income restriction, like always. But they have, like I said, three different programs. The first-time home buyer, $5,000. The first responders and of education as well, $7,500. And of course, for the veterans and military people, we have up to $10,000. And also, we have the down payment assistance for VHDA, which is usually 2.5%. Or 2% of the sales price. And
so when we mention terms such as closing cost and down payment, what is needed for those costs? Can you explain those terms and what would be needed for each of those types?
Yeah, usually for a down payment, the minimum down payment that you can do is 3%.
Okay.
You can do more if you would like to do more. That's fine. But the minimum will be 3%. Now for closing costs, basically. That's the closing cost is all the different amount of money pretty much that you need, in between the loans. You have appraisals there, you have your credit report, you have your taxes and fees, you have your flood certificate, which is basically just in case that your house, your property that you're trying to buy is in a flood zone. We need to test it.
Right.
So that's in there. So all the fees that they are actually involved with the transaction.
So can you tell us a little bit more about the importance of your credit score, what it's made up of, and how maybe we can improve it or take care of it?
Yeah, of course. Basically, the credit score is very important for the mortgage, of course. So basically, the credit is made of all your debts, pretty much all your credits that you have attached within your social. Your credit card, your car loan, everything is in your social. So that number is made from all the credits that you have within your social. Now it's actually made out of your monthly payment, how much that you have, your the length of the payment history, new credit, and if you're late or you're not late. So everything is impact your credit score. In order for you to keep your credit score high, in order for you to be good, with it, basically you need to try to not spend all your money from your credit cards. Always be on time. And that's basically it. Yeah.
Well, thank you, Nicholas, for being with us here today and sharing that excellent information. We are here to get the answers for you. So if you have any other questions regarding mortgages, regarding loans, anything about the process of buying a home, leave your question here below, send me a direct message, and I will get those answers for you. Thank you so much for being with us here today, and we will look forward to being back with you soon.